Hey everyone, it's James Ann.
And James,
So one of the questions we always get asked is about commissions and who pays and how much, and whether that's real estate commissions or loan origination fee. On your side of the spectrum, what's that as far as the real estate commissions and stuff like that?
that's a great question, James. I'm glad you asked it, and I'm glad. Hopefully, this will give a lot of information to our viewers. Our commissions are structured in a very unique way. So, number one, the seller is setting the commission amount that they're offering to the buyer's agent. So, in a buyer's situation where I'm representing a buyer, the listings that are advertised on our MLS system showcase exactly how much compensation is going towards the buyer brokerage firm. Now, it's important for our viewers to understand that the commission that's offered, 3%, 2.5%, 2%, whatever it may be, that is the amount of commission that's coming from the final sales price that's going to the buyer brokerage firm. Now, we take in consideration that number, and then it's broken down into several different components and factors. Number one, your agent that's representing you as the buyer may have to pay a transaction fee. So that's going to come out of the gross amount of that percentage of commission that's being paid. Secondarily, there's going to be also a split or some type of compensation that goes to the firm that allows the realtor to operate within the industry. So whether it's a 60-40 split, 50-50, 80-20, that all goes into factor as far as how real estate agents get paid when they're working a buyer side transaction. Thing I like about working in my firm, eXp Realty, is we have a very flexible commission split structure where it starts at 80-20%. And so out of every transaction up into my cap, I pay into that cap 20% per transaction until I hit that cap, and then I get 80%. After that, I go 100% for the rest of the fiscal year as far as my calendar year is concerned. But that's typically how the buyer side structure works as far as commission. I'm compensated by the amount of commission that the seller is offering. So in essence, the buyer doesn't pay me anything. It's the seller that's paying the commission. Now, ultimately, if I do my job right, we're usually going to look at maybe 3, 4, 5 homes before we start to write an offer and going under contract. Now, on the inverse, when it comes to the seller side, the seller's paying the selling broker's commission and the buyer broker's commission, as I just described before. So when we meet with potential sellers, that conversation is going into how much do we want to offer total. So what you see offered to the buyer broker, say it's 3%, the selling agent or the listing agent may not be getting the same 3%. They may be getting more, they may be getting less. It just depends on that type of conversation that they're having with the seller, because that's where the contract relationship is at. It's with the seller and the listing broker. So that compensation discussion is a little more cut and dry, but at the same time, it's all negotiable. And that's something that came out of our NAR, National Association of Realtors decision. In some cases, they're offering zero commission to the buyer broker for bringing an agent, bringing a buyer to the transaction. Now, when that happens, buyer agents don't necessarily have to show those properties that are offering zero commission. But what they can do is they can go back to the buyer themselves and then the conversation with the lender and how we could structure the deal to where the buyer gets compensated out of the loan funds. And so that's something, I don't know if you've seen that before. Maybe you want to speak to how the lending piece works with the loan origination fees and so on and so forth. What's your
Mhm.
take on that?
Well, so back to what you're saying is it's not just cut and dry where, let's, for example, you see a 3% commission to the real estate agents, because
Hmm.
there is that the behind the scenes of you have your broker cuts and stuff. Not all of those monies are going to the agent, right? There's,
That's
of
right.
course, taxes, there's the
Yep.
broker fees, there's the licensing fees and stuff like that, right?
It's almost like you look at it like you take a dollar and you tear it into three pieces. You know,
Hmm.
one piece is going to the government, the other piece is
Right.
going to the brokerage, and the
So the
other one comes to
commissions
the
are
agent.
just a gross fee, a gross amount, and then there's a
That's right.
net after, and that's the client doesn't
Exactly.
see any of that. They just see the gross. when you look at listings now, you'll see that whatever that commission is being offered if
Hmm.
you guys would go in a contract and stuff like that. Before it wasn't like that. This is like a couple of years ago they started doing that
Yeah,
where when you go onto like a listing site, you would see commission to real estate agent. Generally, it was 3%, right?
yeah. And so typically, yeah, you think you're correct. I think it was, if I'm not mistaken, it's around October of 2021, and it was out of the resolution from a lawsuit
Hmm.
because sellers were operating under the impression that they had to offer a commission. And
Hmm.
so they were thinking that they had to offer a buyer side commissions, and that's not the case these days. Now, sellers have the option to offer a certain amount or nothing. And
Hmm.
that's what came out of that. So in that whole concept of the truth and disclosure piece, they want to advertise to the buying community what commission is being offered to the buyer broker, because another piece that goes into that whole conversation about how commissions are paid is a buyer agency agreement. And within the
Hmm.
buyer agency agreement, it speaks to the percentage that's being offered by the seller is the compensation that the buyer's firm or the buyer broker is going to receive. It could be a flat rate or it could be a minimum standard of commission. So say I'm a buyer broker and I offer my services to the buyer client at 3% commission. Well, the listing that the buyer wants to see is only offering 2.5% commission.
Hmm.
In that example, the buyer broker then has the option to have a conversation with the seller's broker or the buyer themselves to say, our agreement is to work for 3%. This listing is offering 2.5%. I'm still going to show it to you, but I'm asking you permission to have a conversation with the selling broker to discuss with the seller about getting me that additional 0.5% in compensation, or
Hmm.
then go back again to have that conversation with the buyer themselves and their prospective lender, which may be you.
When you're talking with that client, you're discussing the commissions and stuff like that and the differences, and you'll look at it and go, we can offer, let's say, 1%, right? Versus
Hmm.
this another seller offering 3%. You're kind of looking at like this is how we're going to get the most people to come look at the houses based off of that commission.
That's a great question, and again, that's one of the things about dealing with someone and making a decision to hire a agent that represents you in a buyer's position, a buyer's broker. We're duty
Hmm.
bound to show properties that are advertised with some commission. The
Okay.
ones that have offer zero commission, we're not duty bound to show. And
Okay.
so that's where the conversation comes in with the listing broker and the seller. If we don't offer any commission, we potentially may not expose the home to as multiple buyers as there could be. So it's always wise to offer some form of compensation. And but to go back to that conversation again about differences in listing and the commission structure between, like I say, 3%, 2.75 or 2.5%, that's how the agent's getting paid. So if the agent's getting paid solely off of commission, and the national average for buyer transactions, agent transactions, is typically around 4 to 5 deals a year. So
Hmm.
if an agent's doing 4 deals, 5 deals a year, and you're looking at cutting down half a percentage point from a 1/4% of their annual income, most agents are going to be pretty much shaded or more preferring to show the houses that are offering more commission versus the ones that are offering less. That's
Hmm.
just the natural order of things. But it's typically it's really a kind of a conflict of interest when it comes to what you're offering to the seller. I mean, excuse me, what you're offering to your buyer client, because you
Hmm.
want to show them a house that they're most going to be happy with, regardless of how much it pays you. So,
Right. Now I come over on the lender side and I get a lot of questions of who pays you, James?
mhm.
Me, this James.
Yeah, this
um,
Jay, you.
and in my end is you'll see a underwriting fee and a processing fee. And that's let's just
Hmm.
say it's around $1,500, give or take, right? And those fees are the only ones that our company charges the client as far as its loan origination. it's kind of a compensation for at least for the processing side of it, right? Because underwriters and processors are hourly employees. They get paid hourly versus a commission or anything like that. Then you have all your third party stuff like appraisal, credit report, and all that stuff, right? And those are just
Hmm.
standard fees compared on what company's being used or whatnot, right? Sometimes an appraiser charges more because of the property type, the location, and all that, right? So it's case by
Right.
case on that fee. But with our company, it's a flat processing underwriting fee for each transaction. It could be a $200,000 home or $1 million home. That fee's flat. And then once we close the transaction, when we get to escrow and signing and all that, and we funded and recorded with the county, the company then compensates me a percentage from the loan amount. 130 basis points, which is 1.3%, right, of that loan
Hmm.
amount. And then that's the gross that I would receive from the company. Now, if we're looking to, because not everybody, we're looking at square peg, square hole, right? Not everybody fits perfectly in that spectrum. So there's
Hmm.
cases where we have to look outside. It's called a broker. We have to broker out the loan. That's when you start looking at broker fees. And
Okay.
that would be, it just depends, but and it depends on that investor if it's 2% or if it's 2.5%. Typically it's about 2%, just depending on who the that lender is that we're brokering to. But that's the fee charged to find that square hole, right?
Mm.
To fit that client's financing needs, because you'll have clients that either the credit score is too low or the property types, ITIN clients, or you have like a bank asset loan where it's you're just looking at bank statements for income. So that's like more of like your self-employed borrowers. So sometimes they
Okay.
fit into that category versus just your typical general Fannie, Freddie, you're right, FHA type transaction where they have a 620, they have pay stubs, they have W-2s, right? So you're
Hmm.
like, okay, we don't need to broker that out. That's more of an in-house with our investors.
Okay.
So that's where some people are like, well, what is your broker fees? Like, well, we don't broker out unless we have to. If it does go into that correspondent lending side, then we disclose those fees. If we
Okay.
have to broker out, then we're under their terms, their processing, their underwriting,
For our viewers, again, refresh us on again. Why would you broker a loan out versus handling it yourself with your own investors?
let's say it's a self-employed client, tax returns don't show that income that they
Hmm.
would help qualify. But if we can show a paper trail bank statements for a year, we can use the bank statements to determine what the income is, right? We
Okay.
can see that steady cash flow coming in. That
Hmm.
would be a scenario where we would look at brokering it out to a correspondent lender.
Okay.
I kind of use the same scenarios as like an insurance company, where if you contact an insurance company and you fit within their parameters, they're going to
Hmm.
keep that, right? And then, or there's that option, oh, well, your credit score is bad, you've had car accidents, you've derogatories on your driving history. They would then look for another insurance company where you fit. You don't fit in the Fannie Freddie criteria, you fit in those parameters for this bank,
Hmm.
we're going to broker out to them, and there's a fee on top of that to do so, right? You have your typical vanilla 20% down, 800 credit score, right? So when it's a little bit more complex, then you can have that complexity of the financing. It's just when you get over that threshold, brokering out that financing, and that's where that broker compensation fee kicks in, and there's that
Okay.
additional fees versus if it was just a vanilla type transaction, right? So some people are like, how come it's $6,000 when it should be 1,500, right? Like, because
Hmm.
you'll see processing, underwriting, and then your broker fee. Let's say there's a discount points associated with the interest rate. You'll see that
Okay.
there for that fee, and people are like, "Well, are you getting paid on that loan discount?" No, that's you buying the rate. If it's a par pricing, you won't see that fee. You're talking about like rolling in those fees into the financing.
Hmm.
You typically can on a purchase because you don't
Hmm.
when you're rolling in fees to do financing, you're
Yeah,
rolling in the equity of the home to pay those fees, right?
I
Well,
see. Uh-huh.
when you're in a purchase scenario, you don't own the home until you signed at closing. So you don't
I
own
see.
the equity of that home, right?
Got it.
So I've
Yes.
had people at, well, can I just roll the financing? I'm like, well, with what equity? You don't own the home
Mm,
yet, right? No,
you
oh,
know,
okay. It's not
exactly.
like a refinance where you own the home. There's that you're using your equity. Right.
So let's think about for sale by owner properties or off
Hmm.
market deals. Obviously, as the world knows, for sale by owner is not paying any commission from the beginning, or they're not advertising any commission because they're not listed on the MLS. And the seller says, I'm willing to work with your buyer, but I'm not willing to offer a commission. Is there a way that we could maybe bump up the purchase price to offset the commission, and that way I could get paid from the transaction that way, or is that out of the scope of the lending practices?
The way that could happen, that scenario could happen, is because you're bumping up the purchase price. The
Hmm.
challenge is that the value of that home, right? Let's say
Willing to
you're
praise for it.
right,
Yes.
if it appraises for that amount, right? So
Hmm.
if you're needing an extra, let's say
So
20
you say,
grand,
oh,
$400,000 the listing price, we want this commission, our offer will be 420, right?
Hmm.
The appraisal has to come in at 420 for that to
I see.
happen, right?
Okay.
Because then the seller's getting that difference at that point, right?
Hmm.
But if the value comes in at, let's say 405, well, now your difference is 15 grand. And
I totally get it. Yeah, and that's why typically my approach when it comes to advising buyers that are looking at off-market properties or for sale by owners is, I'll do it for you, but you have to give me the latitude to negotiate with the seller to pay my commission out of their proceeds. And that way,
Mhm.
I think it keeps the inflation scenario for the purchase price to compensate for the buyer paying the buyer broker's commission. It
Right.
keeps that out of the conversation. If the seller can do what they want to do with their proceeds at the time of closing because that's their equity, like we talked about
Mhm.
before. When we talk about rolling into fees into the product of the loan product, you don't own that equity yet because you haven't closed. So
Right.
you
Right.
can't do that.
Because in that
Hmm.
because in that scenario, you're asking the seller if we offered X more, right?
Hmm.
Then can we then offset those commissions or the fees? So I mean, just like that another thing is seller concessions, right? We
Hmm.
kind of talked about that
we'll
too.
put
Put in
in
an
an
offer, but can we get a seller concession of 20 grand to help pay for closing costs, right?
Yeah.
Same
Hmm.
scenario applies. Well,
Is there a limit on how much seller concession can
there
come to the buyer?
is there is it's like
Hmm.
differences if you're using FHA versus conventional versus VA,
Okay.
right? It's like it
Right.
ranges between 3 to 6% depending on what you're using.
Sounds like a perfect opportunity for someone to reach out directly to you.
Right, right. Well, and that's the way to help kind of orchestrate the financing to help structure it. Be like,
Hmm.
well, people are like, oh, I don't have closing costs. I'm like, okay, well,
Yeah.
let's talk with the real estate agent, see if
Hmm.
there'd be a way to negotiate with the seller to do a concession and then to help offset it, and everybody's happy, right?
Yes.
The seller gets
Excellent.
what they
Excellent.
want, the buyer gets what they want, the commissions are paid to the real estate agent. You're not paying my commissions because the lender is,
Hmm.
right?
Yes.
Everybody's happy, right?
That's
Well,
good.
thanks, James. I appreciate your time, and I'm looking forward to the next conversation. And if you guys have any questions, let
Absolutely.
us know. Thanks for watching, James. And
And James, thanks so much.